Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of a bloodbath in equity markets worldwide. In fact, we're witnessing a dangerous sell-off in all financial markets. Wall Street is down a whopping 3.4% so far today and sinking fast. And that follows Europe, that was down 2% overnight. And they followed steep declines in Asia. Shanghai was down 1.6% despite home team support. Hong Kong was thrashed 2.9%, and Tokyo was not much better, down 1.7%. Yesterday, Australia lost 2% and the New Zealand market lost 0.9%. This could well be the start of the Trump recession. The tax cut sugar rush is worn off and fast. The hangover starts. Commodities are falling, with oil down 1.8%, copper down nearly 4%, and iron ore dropping 6%. We have our eyes on the dairy prices in the Wednesday's auction. Derivative pricing suggests a small retreat there. Gold, on the other hand, is up more than 1.7%. Not helping is that benchmark interest rates are sharply lower too, with the US Treasury 10-year yield now down to 1.74%. The Australian government 10-year yield fell to just 1.02% and may slip under 1% soon for the first time ever. Remember, this is a rate that started 2019 at 2.3%. Given that this market slump was triggered by US tariff action, most economic data precedes that trigger. But still, in the US, the closely watched ISM Services PMI has disappointed for July. It has come in at its weakest level since August 2016. New orders dropped to a 3-year low. And China is releasing its peg on the yuan. The Americans are fixated on this, but they can hardly be surprised. The 7 to the dollar level is now breached. The trade war may now morph into what was always a likely outcome of a tariff war, a currency war. And an own goal by Washington, given that the US can't really respond to its currency, as its currency is the benchmark for trade. China also has halted crop buying from the US. These market earthquakes are probably more than the US Fed actions or any central bank can weigh against. In China, their services PMI has come in at a 5-month low. And in Australia, a similar survey has also weakened. But globally, the service sector was expanding moderately in July. However, that was before ructions this week. Today, the US Treasury 10-year yield is now down to 1.74%, as we mentioned, and that's 10 basis points lower in a day. Gold has leapt higher today, up to $1,467 an ounce, a $27 gain overnight. And US oil prices are falling hard. They're now just on $54.50 a barrel, which is a drop of more than $1. The Brent benchmark is even lower at $59.50, a drop of more than $2. And the Kiwi dollar starts the day firmer than intraday trading yesterday, but back to where it was at the start of the day yesterday, at 65.4 US cents. On the cross rates, we're firmer at 96.6 Aussie cents, and that's a 19-week high. Against the euro, we're softer at 58.4 euro cents. That sets the TWI at 70.7 and little changed overnight. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.